Something extraordinary is happening in the gold market right now, and if you're not paying attention, you're about to miss one of the most significant wealth transfers in modern financial history. What I'm about to show you isn't speculation. It's not theory. It's happening in real time, and the implications are staggering. Let me ask you something. When was the last time you saw gold hit all-time record highs while simultaneously decoupling from every traditional correlation it's held for decades? When was the last time central banks around the world threw caution to the wind and started accumulating physical gold at a pace we haven't seen since the collapse of Bretton Woods? The answer is never, until now. Right now, gold is trading near historic highs. And here's what nobody's talking about. It's not moving with the dollar anymore. It's not responding to interest rates the way it used to. It's not following the playbook. And that should terrify you or excite you, depending on which side of this trade you're on. Because when an asset as foundational as gold starts writing its own rules, it means the old system is breaking down and something new is being born. Let me take you inside what's really happening. For years, gold moved in lockstep with the US dollar. Dollar goes up, gold goes down. That's the relationship every trader, every analyst, every central banker understood. It was predictable. It was reliable. It was the foundation of how we understood value in the global financial system. But that relationship is shattering right before our eyes. Look at what's happened over the past several months. Gold has been climbing relentlessly, setting new records, pushing into territory that most analysts said was impossible. And the dollar? It's been strong. By all traditional metrics, gold should be getting crushed, but it's not. It's doing the opposite. It's rising alongside a strong dollar, and that breaks every rule in the book. When assets start behaving in ways that defy decades of established patterns, it's not a glitch. It's a signal that the game has changed. Now, before we go any further, I want to make sure you have access to something I put together. There's a free guide in the description below that breaks down the saving secrets thousands of American retirees are using right now to protect their hard-earned wealth. It's completely free, and if you're concerned about what's coming, you'll want to grab that. All right, let's keep going. So why is this decoupling happening? To understand that, you need to understand what's driving demand for gold right now. And it's not retail investors. It's not even hedge funds. It's central banks. And they're buying gold like their lives depend on it, because in many ways they do. Let me paint you a picture. Over the past few years, central banks have been net buyers of gold at levels we haven't seen in over half a century. We're talking about hundreds of tons of physical gold being pulled out of the market and locked away in sovereign vaults. China's been buying, Russia's been buying, India, Turkey, Poland, Singapore. Countries that have never been major gold buyers are suddenly stockpiling it like it's going out of style. Why? Because they see what's coming. They see a global financial system that's built on debt, leverage, and the assumption that the US dollar will remain the world's reserve currency forever. And they're hedging against the possibility that it won't. They're preparing for a world where the dollar's dominance is challenged, where inflation spirals out of control, where geopolitical tensions fracture the existing order. And in that world, gold isn't just a safe haven. It's the ultimate form of money. Think about what happened after the financial crisis. Central banks around the world printed trillions of dollars, euros, yen, trying to prop up a collapsing system. And it worked for a while. But that money didn't disappear. It's still out there, sloshing around in the system, inflating asset prices, creating bubbles, eroding purchasing power. And now, with inflation running hot, with debt levels at all-time highs, with geopolitical instability reaching levels we haven't seen since the Cold War, central banks are realizing that they need an anchor, something real, something that can't be printed, debased, or manipulated, and that's gold. But here's where it gets really interesting. This isn't just about central banks protecting their reserves. It's about a fundamental shift in how the world views money. For decades, the US dollar has been the undisputed king of global finance. Oil is priced in dollars. International trade is settled in dollars. Central banks hold dollars as their primary reserve asset. But that system is under attack. The BRICS nations, Brazil, Russia, India, China, South Africa, have been working for years to create an alternative to the dollar-dominated system. They've been building payment systems that bypass the dollar. They've been settling trade in their own currencies, and they've been accumulating gold, lots of it. Because they know that if they're going to challenge the dollar's supremacy, they need something to back their currencies with, something the world trusts, and that's gold. Now I know what you're thinking. This sounds like conspiracy theory stuff, but it's not. This is happening in plain sight. China has been quietly building up its gold reserves for years, and most analysts believe they have far more gold than they officially report. Russia has been converting its dollar reserves into gold, reducing its exposure to US sanctions and dollar volatility. India has been repatriating its gold from foreign vaults, bringing it home where they control it. These aren't random moves. This is a coordinated strategy to reduce dependence on the dollar and increase reliance on gold. And it's working. Look at what's happened in the oil market. For the first time in decades, we're seeing oil trades settled in currencies other than the dollar. China is buying oil from Saudi Arabia and paying in yuan. Russia is selling oil to India and accepting rupees. These are small cracks in the foundation of the petrodollar system, but they're growing. And every time a major oil trade happens outside the dollar system, it weakens the dollar's position as the world's reserve currency, and it strengthens the case for gold. But let's bring this back to what it means for you, because this isn't just some abstract geopolitical chess game. This is about your wealth, your retirement, your financial security. If the dollar loses its status as the world's reserve currency, even partially, the implications are enormous. It means higher inflation. It means a weaker dollar. It means your savings, your retirement accounts, everything denominated in dollars loses purchasing power. And that's not a maybe. That's a mathematical certainty. So what do? You do what the central banks are doing. You hedge, you diversify, you move a portion of your wealth into assets that can't be printed, that can't be debased, that hold value, regardless of what happens to the dollar. And the most obvious choice is gold. Now here's something most people don't understand about gold. It's not just a hedge against inflation. It's a hedge against systemic risk. It's a hedge against the possibility that the financial system as we know it undergoes a fundamental transformation. And right now, that possibility is higher than it's been in generations. Let me give you a historical parallel. In the early 1970s, the world was operating under the Bretton Woods system, where currencies were pegged to the dollar and the dollar was pegged to gold. It was a stable system, or so everyone thought. But behind the scenes, cracks were forming. The US was running massive deficits to fund the Vietnam War and social programs. Other countries were losing confidence in the dollar, and they started demanding gold in exchange for their dollars. In 1971, President Nixon did something that shocked the world. He closed the gold window. He ended the convertibility of dollars into gold. Overnight, the entire global monetary system changed. Currencies started floating, inflation exploded, and gold? Gold went from $35 an ounce to over $800 an ounce within a decade. The people who saw it coming and positioned themselves in gold before the shift made fortunes. The people who didn't got crushed by inflation. We're in a similar moment right now. The signs are all there. Massive government debt, central banks buying gold at record levels, geopolitical tensions rising, alternative currency systems being built, the dollar's dominance being challenged, and gold decoupling from its traditional correlations. History doesn't repeat, but it rhymes. And right now, it's rhyming with the 1970s. But there's another layer to this that most people miss. It's not just about central banks and geopolitics. It's about supply and demand. And the supply side of the gold equation is getting tighter by the day. Gold mining is an incredibly difficult, capital-intensive business. It takes years to bring a new mine online. And right now, we're not seeing a lot of new supply coming to market. In fact, global gold production has been relatively flat for years. The easy gold has already been mined. What's left is deeper, harder to extract, more expensive to produce. And with environmental regulations tightening, permitting processes getting longer, and costs rising, it's getting harder and harder to bring new gold to market. At the same time, demand is exploding. Central banks are buying, retail investors are buying, institutional investors are buying. And here's the kicker. A lot of that gold is being taken off the market permanently. When a central bank buys gold, it doesn't sell it. It sits in a vault. When a wealthy individual buys physical gold bars and stores them, that gold is out of circulation. This creates a supply squeeze. And when you have rising demand and constrained supply, there's only one direction prices can go. But let's talk about something even more important: the difference between paper gold and physical gold. Because this is where things get really interesting and really dangerous if you're on the wrong side of it. Most of the gold that trades in the world isn't physical gold. It's paper gold. Futures contracts, ETFs, certificates, derivatives. These are financial instruments that give you exposure to the price of gold without actually owning the metal. And for a long time, that was fine. It was convenient. It was liquid. It tracked the price of gold reasonably well. But here's the problem. The amount of paper gold in the system far exceeds the amount of physical gold that actually exists. Some estimates suggest that for every ounce of physical gold, there are 100 ounces of paper claims on that gold. Think about that. If everyone who owns paper gold decided they wanted to take delivery of physical metal, the system would collapse. There isn't enough gold to go around. And that's exactly what's starting to happen. More and more investors are demanding physical delivery. They're pulling gold out of ETFs. They're taking delivery on futures contracts. They're buying physical bars and coins and storing them outside the banking system. And every time someone does that, it tightens the physical market even more. This is what I mean by decoupling. Gold isn't just decoupling from the dollar, it's decoupling from the paper gold market. The price of physical gold is starting to diverge from the price of paper gold. And when that divergence becomes too large, when the market realizes that there isn't enough physical gold to back all the paper claims, that's when things get explosive. We've seen this movie before. In the silver market back in the early 2000s, there was a massive short squeeze when investors realized that the physical supply of silver was far tighter than the paper market suggested. Prices went parabolic. The same thing happened in the nickel market recently when a short squeeze forced the London Metal Exchange to halt trading. When physical markets decouple from paper markets, the results can be violent and swift. And that's what's setting up in gold right now. The physical market is tightening. Central banks are hoarding it. Retail demand is surging. And the paper market is still pretending that everything is fine, that there's plenty of gold to go around. But there isn't. And when the market wakes up to that reality, the repricing is going to be brutal for anyone caught on the wrong side. Now let me shift gears for a second and talk about something practical. If you're sitting on retirement savings, if you have money in a 401k or an IRA, you need to understand that you have options. A lot of people don't realize that you can hold physical gold inside a retirement account. It's called a gold IRA, and it allows you to move a portion of your retirement savings into physical precious metals without triggering taxes or penalties. I put together a comprehensive guide on how this works. It's in the description below. It walks you through the process, explains the rules, shows you how to protect your retirement savings from the kind of systemic risks we've been talking about. If you have $100,000 or more in retirement accounts, this is something you need to look at, because the window to protect yourself is closing. Once the crisis hits, once gold has already repriced, it's too late. You want to be positioned before the move, not after. All right, back to the bigger picture. Let's talk about what happens next. Because understanding where we are is one thing. Understanding where we're going is what separates the people who profit from the people who get left behind. Gold is in the early stages of what I believe will be a historic bull market. We're not talking about a 10 or 20% move. We're talking about a fundamental repricing of gold relative to fiat currencies. And the catalysts are lining up perfectly. First, you have inflation. Real inflation, not the manipulated numbers the government puts out. Anyone who buys groceries, pays rent, fills up their gas tank, knows that the cost of living is rising far faster than official statistics suggest. And inflation is gold's best friend. When the purchasing power of currency declines, people flee to hard assets. And gold is the hardest asset there is. Second, you have debt. Government debt, corporate debt, consumer debt. The world is drowning in debt, and there's no way to pay it back without inflating it away. That means more money printing, more currency debasement, more reasons to own gold. Third, you have geopolitical instability, wars, trade conflicts, sanctions, the fracturing of the global order. Every time there's a geopolitical crisis, gold rallies. And right now, we're living in one of the most unstable geopolitical environments in modern history. Fourth, you have the dollar's declining dominance. This is the big one. For decades, the dollar's status as the world's reserve currency has allowed the US to run massive deficits without consequence. But that's changing. Countries are diversifying away from the dollar. They're building alternative systems. And as the dollar loses its privileged position, gold gains. And fifth, you have the supply squeeze we talked about. Physical gold is getting harder to find. Central banks are locking it away. Retail investors are taking delivery. And the paper market is running out of room to manipulate prices. When you put all of these factors together, you get a perfect storm for gold. And we're just at the beginning. The real move hasn't even started yet. What we're seeing now is the setup, the foundation being laid, the smart money positioning itself before the crowd figures it out. Let me tell you a story. Back in the early 2000s, there was a fund manager named John Paulson. Most people hadn't heard of him. He wasn't famous, he wasn't on TV. But he saw something that nobody else was seeing. He saw that the housing market was built on a foundation of bad loans, fraudulent ratings, and unsustainable leverage. And he bet against it. He bought credit default swaps on mortgage-backed securities. And when the housing market collapsed, he made billions. The reason I'm telling you this story is because what's happening in gold right now is similar. Most people aren't paying attention. The mainstream media is focused on stocks, crypto, tech. But underneath the surface, a massive shift is taking place. The smart money, the central banks, the billionaires, they're accumulating gold. They're preparing for what comes next. And if you're paying attention, if you understand what's happening, you can position yourself alongside them. But here's the thing. You can't wait. You can't sit on the sidelines and hope that everything works out. Because by the time the mainstream catches on, by the time gold is on the front page of every newspaper, it'll be too late. The move will have already happened. The gains will have already been made. And you'll be left wondering why you didn't act when you had the chance. This is your moment. This is your opportunity to protect your wealth, to position yourself for what's coming, to take control of your financial future. The signs are all there. The decoupling is happening. The central banks are buying. The supply is tightening. The system is breaking down. And gold is about to reprice in a way that will shock the world. So what do? You educate yourself. You understand the risks. You make a plan. And you act. Whether that's buying physical gold, moving a portion of your retirement savings into a gold IRA, or simply diversifying away from assets that are tied to the fate of the dollar, you need to do something. Because doing nothing is a choice. And it's the worst choice you can make right now. I want to leave you with one final thought. Throughout history, every time a major monetary system has collapsed, every time a reserve currency has lost its status, gold has been the constant. It's been the asset that preserves wealth, that maintains purchasing power, that survives the chaos. The Roman Empire debased its currency, and gold survived. The Weimar Republic printed money into oblivion, and gold survived. The British pound lost its status as the world's reserve currency, and gold survived. We're living through another one of those moments. The dollar-based system that has dominated global finance for the past 80 years is under stress. The cracks are showing. The alternatives are being built. And gold is reasserting itself as the ultimate form of money. The question isn't whether this is happening. The question is whether you're going to be prepared for it. If you've made it this far, you're clearly someone who takes this seriously. You're not content to just accept what you're told. You want to understand what's really happening. You want to protect what you've worked so hard to build. And that's exactly the right mindset. So here's what I want you to do. Go to the description below and grab that free guide. It's packed with information that can help you navigate what's coming. And if you're serious about protecting your retirement savings, if you have $100,000 or more in retirement accounts, you'll also get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just education. Because the more you understand, the better decisions you can make. The price of gold is about to decouple in a way that will redefine wealth preservation for a generation. The only question is whether you'll be on the right side of that move. Don't wait until it's too late. The time to act is now.